Bloomberg Audio Studios. Podcasts, radio, news.
This is the Bloomberg Daybreak Europe podcast, available every morning on Apple, Spotify or wherever you listen. It's Wednesday, the 21st of August in London. I'm Stephen Carroll.
And I'm Francine Lacqua. Coming up today, bond traders take on a historic level of risk as they ramp up bets on rate cuts from the Federal Reserve.
Barack Obama takes to the stage of the Democratic National Convention as Harris's candidacy stirs hopes for a repeat of 2008.
Plus, no deal. America's top diplomat leaves the Middle East without a ceasefire agreement as Hamas and Israel failed to agree on the latest proposal.
Let's start with a roundup of our top stories.
Bond traders are taking on a record amount of risk on Federal Reserve rate cut bets. Now, the number of leveraged positions in Treasury futures sits at an all-time high ahead of the central bank symposium in Jackson Hole, Wyoming this week. At the event, the Fed Chair Jay Powell is set to give further insight into monetary policy path as expectations of a Treasury market rally grow. Now, Vanessa McMichael, head of corporate and public entity strategy at Wells Fargo, says investors are convinced lower borrowing costs are imminent.
It seems like our corporate investors have now accepted that we are very close to the first Fed funds cut. We're seeing clients accept this, and we've spoken to a number of clients over the past few months, corporate clients, where we were having this conversation, and they finally have implemented like a bond ladder. And this is a conversation we've been having with them over the past year.
Wells Fargo, Vanessa McMichael there. Now, traders have been betting on a wide variety of Fed scenarios that could play out this year. Currently, about 30 basis points of cuts are priced for next month.
Barack and Michelle Obama have delivered speeches painting Vice President Kamala Harris as the heir of their political legacy. In speeches to the Democratic National Convention in Chicago, both pivoted between blistering critiques of Republican nominee Donald Trump and calls for unity. Although Harris has a slim lead in national polls, Barack Obama made clear that he believes the party needs to reach out beyond its base.
We need to remember that we've all got our blind spots and contradictions and prejudices. And that if we want to win over those who aren't yet ready to support our candidates, we need to listen to their concerns and maybe learn something in the process.
While Barack Obama drew parallels to his own historic victory, the former First Lady drew rapturous applause when she took aim at Trump's promise to deliver more, quote, black jobs.
Who's going to tell him that the job he's currently seeking might just be one of those black jobs?
Harris's team is hoping to rebuild the multi-ethnic, multi-generational coalition that elected Obama twice, turning out black voters and drawing support from suburban white and independent voters.
The British tech entrepreneur Mike Lynch is one of 6 people feared dead after a storm sank the luxury yacht they were on off the coast of Sicily. Morgan Stanley International chairman Jonathan Bloomer is also among those missing. Lynch's friend David Tabazet says it's a distressing time for friends and family of the businessman.
His integrity, his intelligence, his sense of fun meant we've all got a very soft spot for this man. He's a legend. And for somebody that's been through his last 12 years, I'm just heartbroken for him and his family. And I hope there's a miracle about to occur.
David Tabazet, co-founder of the software company Autonomy with Mike Lynch. The group on board the yacht were celebrating Lynch's recent acquittal from fraud charges associated with the 2011 sale of the firm to Hewlett-Packard. Well, the Italian Coast Guard says it will continue the search of the sunken wreckage. 6 other passengers and 9 crew members have been rescued.
The European Union is planning to introduce a 9% tariff on Teslas imported from China, its latest response to Beijing's EV subsidies. That's lower than the double-digit levies on Chinese manufacturers like SAIC or BYD. Auto investment guru Bill Russo says there's a clear message behind the different tariff levels.
What the EU is signaling is they don't want made in China exports. They would rather have the Chinese supply chain and the Chinese capacities moved into the European Union. Tesla, you've got a factory in Berlin. Why not build your cars here? BYD, you're going to build a factory in Hungary. We like that. You get a lower speeding ticket. So it's actually an invitation for Chinese companies to bring their capacities closer to the European Union.
That's the CEO of Automobility, Bill Russo, speaking to Bloomberg. Officials say the relative good news for Tesla is because the car giant was judged to be benefiting less from subsidies than other firms. China claims the measures are protectionist and has threatened to retaliate.
The UK government is pledging funds and staff for a migration crackdown after the far-right riots earlier this summer. The plan aims to tackle migrant workers being employed illegally in people smuggling gangs. Well, Bloomberg's James Wilcock has more.
Home Secretary Yvette Cooper has set a target. She wants to deport more illegal migrants in the next 6 months than the previous government managed in any 6 months since 2018. That means nearly 15,000 people. It's a key focus of the new government, which wants to prove it can do better than Rishi Sunak's Rwanda scheme and sees immigration as a key test to win over voters. But migration has been a problem successive British governments have promised and failed to fix. In London, James Wilcock, Bloomberg Radio.
The UK's new Transport Secretary says she plans to support local authorities who want to introduce 20-mile-per-hour speed zones, cycle lanes and low-traffic neighbourhoods. Louise Haigh says she wants to end the culture wars over transport policy after the Conservatives had sought to paint Labour as waging a war on motorists. While evidence suggests the 20-mile-per-hour zones reduce accidents, polling finds they are deeply unpopular. Now, in a moment, we'll bring you more on how bond traders are gearing up for Jay Powell's comments at Jackson Hole later this week, plus the latest on the ceasefire talks in the Middle East. But for another story that caught my eye this morning about sending high school students, looking for a high school student in finance, essentially, is the story. These are seminars in Hong Kong being offered to 15 to 18-year-olds to give them a taste of what working in finance is like.
Yeah, join us at 5 a.m. at Bloomberg. It's a great story. Our colleague Lulu Chen has actually been writing about these events where 15 to 18-year-olds undergo 2 days of free training, which ends with a simulation where they're managing a $20 million portfolio.
But that sounds quite fun. But actually, if you read it, it sounds quite stressful. So, I mean, because they're essentially being given the full pressure of what it's like to do these jobs as well. It's part of the war for talent. Of course, the big finance houses are looking to try and get those, young, bright minds as early as possible. These seminars are normally run for university students. So the idea is to try and get high schoolers in first, give them a taste of it, and then see if they want to go on to the later courses, which are the ones that are meant to get them into the internships in the Morgan Stanleys or the Citadels. But it's a great piece because it speaks to some of the young people who are actually doing them and their ambitions for it as well. And there's some interesting stuff in there as well about kind of, while also showing the excitement of it, showing the pressure that's involved and how you need to love it if you're going to do it.
Yeah, I don't. Do you want to go into a job knowing that there's a lot of pressure, or do you want to build it up? I mean, I know I'm getting all philosophical.
But this is the excitement/pressure dynamic, right? It's part of what makes a job exciting is if you have to do things urgently and quickly, says Fran and I, looking at each other sheepishly this hour of the morning. We better leave that there.
We're loving it.
Yeah, exactly.
No, but it's good. It's a war for talent, but also you need to recruit the right people. So I guess giving him a heads up of how hard it can be is the only way that you then retain people that will stay with you for 20 years.
True, and get people that are really interested in it as well. Let's bring you more, though, now on how bond traders are positioning ahead of Fed Chair Jerome Powell speaking at Jackson Hole later this week. Our MLive strategist Mark Cranfield joins us for more. Morning to you, Mark. Can you talk us through the shift then that we've seen in risk taking by bond traders? What are they betting on, and what's the scale involved?
Yes, good morning. Huge is the scale. It's particularly leveraged traders. So there's weekly data which comes out from American exchanges, and it shows that positioning has never been bigger than this in the Treasury market. Now, it's not just because people are getting confident that the Federal Reserve is moving close towards its first interest rate cut in this cycle. That's part of the story. But also within the Treasury curve, there's a lot of movement going on between different parts of the curve, between the short end, the medium and the longer end of the curve. So we still have this inversion between the 2 years and the 10 years, which has been in place for almost 2 years now. But then there's also these strange kinks where the 30-year yields are much higher, are in the 10s or the 5-year sector of the curve. So traders, professional traders that is, who have a lot more information and are willing to bet a lot bigger numbers, they're willing to take positions against the short end versus the long end and different parts. So movements within that, even if the Federal Reserve didn't actually lower interest rates as quickly as they expected, there will still be shifts between the short and the end of the curve, which they can still make money from. So that partly explains why positioning is so big and probably will stay big for quite a while yet.
Yeah, so Mark, the problem with that is that, and good morning, is that it can be on the wrong side of the bets. Jay Powell in the past has given huge policy things at Jackson Hole, or he hasn't said much at all. Is there a worry that actually treasuries will not move in the direction they're hoping?
There is certainly a risk that we see a sudden backup in yields after Jerome Powell speaks, because he might be reluctant to endorse all of the interest rate cuts which are priced into the curve. So if you look at the derivatives curve in America, they're pretty much expecting the Federal Reserve to begin lowering rates in September, but then to continue pretty much through to the middle of next year. Now, Mr. Powell might be uncomfortable with that because he has said many times the Fed is data dependent. And of course, he doesn't know how all the data is going to play out for the next year. So he may well get people ready for the fact that we're going to make our first move in September. But he will try and get people to think, well, it's not certain that we are going to follow up immediately with another rate cut and continue to do so for some time. He'll probably want to put some doubt into people's mind. Now, given how much is already at stake, how much people have invested, there is certainly room for Treasury yields to jump up a little bit higher, at least for a while after he speaks. But then, of course, the data will start to kick in again. We still have one more very important employment report, and we have another inflation report to come before the Fed actually meet in September.
Yeah, there's plenty to come between now and then, as you say. Lots can happen. A week is a long time in the markets, as we know, Mark. Thank you very much for joining us. That's RM Live strategist Mark Cranfield joining us now as we're looking ahead to those speeches at Jackson Hole, but also, of course, another central banker, the Bank of Japan Governor Kazuo Ueda, speaking to the Japanese Parliament on Friday as well. So plenty for traders to digest on that front too. Let's turn next to the Middle East, where the US Secretary of State Antony Blinken has left the region with few visible signs that a ceasefire deal is imminent. He says Israel has signed up to a so-called bridging agreement, and he hopes and expects that Hamas will do the same. Our head of Middle East and North Africa coverage, Stuart Livingston-Wallace, joins us now for more. Stuart, thanks for joining us. Blinken spent yesterday meeting Egyptian and Qatari officials. No signs of further progress from there. Can we expect any now?
No, I mean, the visit didn't go desperately well. Nor was it a complete disaster. I don't want to say that. But just in terms of, so let's start with Egypt. I mean, yes, he did meet some senior officials. Didn't feel like anything much came out of that. So there was certainly no progress on that front. And Egypt had already, in any case, been involved in this bridging agreement or the formulation of it in any case. He then flew, whatever it was, 3.5 hours to Qatar. And most of the meetings that were on the schedule never really happened. So he was supposed to meet the emir. That didn't happen. I think they're going to try and do something by phone in the next couple of days. And in fact, I don't think he actually ever left the airport. So that was not an enormous success. But again, Qatar had been deeply involved as one of the mediators. So no great surprise that there was no progress there. I think what was most frustrating about the visit from the US side was Netanyahu, in that it felt like he had signed up to this bridging agreement, but then said some comments publicly that really irritated a lot of people. And it did feel like he was saying one thing to one audience, another thing to another audience, and then a third thing to another audience. So it's very hard to pin down what exactly his position is. And then on the Hamas side, it does feel like there's some flexibility there, but again, it's not entirely clear what they're objecting to and to what extent that might scupper a deal.
Stuart, good morning. We also heard, I think, about 15, 20 minutes ago that Iran is said to be calibrating an Israel response to avoid impacting the ceasefire. I don't really know how to take that.
Well, I think there's a couple of things going on here. So, the first and foremost, you can argue that by holding off, that is to some extent psychological warfare, and the idea being that if you keep threatening an attack, then your opponent is going to feel increasingly nervous. Now, I think the reality on the ground in Israel, or at least our reporting has showed that actually people, I wouldn't say they're not bothered, clearly they are, but there's no sense of panic within Israel. Yes, some additional preparations are being made for a possible retaliatory attack. But I think there's also great confidence, both in their own defenses and the fact that the US has been moving so much weaponry into the region to head off any potential attack. I think the second thing to think about in terms of how Iran is calibrating this is what might it get from global powers if it does hold off completely, and what might it achieve by holding off on attack, because the risk is always as we saw in April when it sent this barrage of about whatever it was, 300 missiles and drones across directly to Israel. So more or less all of them were knocked out of the sky. So the risk on one side is that you end up looking weak, however many missiles and drones you send across. Number two, one of them goes off target and hits something really, really bad, so civilian population, something along those lines, and then Israel is forced in turn to escalate. And Iran, if nothing else, has always been very careful about trying very hard not to escalate things because there's not a lot in it for Iran for a full-scale war.
Stuart, of course, as all of this is happening, there are still more Israeli strikes on Gaza, more deaths reported yesterday as well. What do we know about the situation there now?
I mean, I think it continues to be a very, very difficult situation. So we've basically effectively moved into a new phase of the war, and that happened some time ago. So from the sort of the full-scale assault that we saw in the early months, moving further south down towards the Rafah crossing with Egypt. And now it feels much more sort of a more targeted response to, outbreaks of violence. So you've seen, for instance, this Operation Khan Yunis in the center of Gaza, that again is a much more targeted series of attacks. However, you can't understate the devastation that takes place in Gaza or has taken place in Gaza. I would urge everyone to go and read the very nice and large piece that we did over the weekend showing the extent of the damage and, more importantly, what it's going to take and how long it's going to take to try and repair that when hopefully the war is over.
This is Bloomberg Daybreak Europe, your morning brief on the stories making news from London to Wall Street and beyond.
Look for us on your podcast feed every morning on Apple, Spotify and anywhere else you get your podcasts.
You can also listen live each morning on London DAB Radio, the Bloomberg Business app and Bloomberg.com.
Our flagship New York station is also available on your Amazon Alexa devices. Just say, Alexa, play Bloomberg 1130. I'm Caroline Hepker.
And I'm Stephen Carroll. Join us again tomorrow morning for all the news you need to start your day, right here on Bloomberg Daybreak Europe.